Hello, everyone. Thanks for clicking on the video today. It is really great to have you here with us.
Hey everyone.
We're looking at the Q4 2025 earnings call for Meta Platforms, and honestly, looking at these numbers, the dollar amounts are just hard to wrap your head around. We're talking about a company that seems to be betting its entire future on infrastructure.
It's definitely a pivot point. I mean, we've seen big spending from tech giants before, but this feels different. Mark Zuckerberg isn't just talking about connecting people anymore. He's trying to build what they are calling a personal superintelligence.
Which sounds a bit like marketing fluff, doesn't it?
Yeah.
But we'll get into what that actually means for the product. So here's the plan. We're going to process the prepared remarks from management. That's Mark Zuckerberg and CFO Susan Lee. We need to look at the financials in this massive strategic shift.
And then the Q&A.
And then we're going to go through the Q&A session, question by question. We'll break down what the analysts asked and, more importantly, how Meta answered.
Yeah, that Q&A is crucial today because that is where we find out if Wall Street is actually buying this vision or if they're just, terrified of the price tag.
Speaking of the price tag, let's not bury the lead. But first, the user numbers. 3.5 billion people use at least one of their apps daily.
It's a population scale number, but what stood out to me in the prepared remarks was how they are framing those users. It's no longer just social media. The data from those 3.5 billion people is now the fuel for this personal superintelligence.
Okay, explain that. Because to me, it just sounds like a smarter chatbot.
Well, it's more than that. Zuckerberg declared 2026 the year agents really start to work. And he's not talking about a bot that, writes a poem for you. He means AI that understands your specific personal context, your history, your interests, your relationships. He explicitly said they want to build AI that understands you better than any other platform because they have that unique social graph data.
So if I'm understanding this right, Google knows what I search for, Amazon knows what I buy, but Meta knows who I am and who I talk to.
Exactly. And they are betting that that is the killer app for AI. To support that, the financial results were strong. Q4 revenue hit $59.9 billion, up 24% year over year. Net income was $22.8 billion.
Huge numbers.
Yeah, and they also grew headcount to around 78,800, but almost all of that growth is focused on AI and infrastructure.
Zuckerberg also spent a lot of time on hardware. He mentioned smart glasses sales tripled last year.
Yeah.
He actually compared this moment to the arrival of smartphones. He said eventually all glasses will be AI glasses.
That is the interface bet. If the AI is the brain, the glasses are the eyes and ears. But there was also a fascinating update on how they're working internally. We always worry about AI taking jobs, but Meta is using themselves as the guinea pig.
Yeah, the productivity stats were pretty interesting. He said AI coding tools have increased output per engineer by 30%.
And for power users, it's an 80% jump.
An 80% jump. We talk about flattening teams.
Right. Projects that used to take a whole team can now be done by one talented person with AI. That efficiency is really the only reason they can afford what comes next.
Okay, the number that made everyone do a double take.
Right.
The guidance from CFO Susan Lee.
This is the part that matters. The capital expenditures, or Capex, guidance for 2026 is between $115 billion and $135 billion.
Let's just pause on that. To put this in perspective, $135 billion is more than the GDP of most countries. It is double what they were spending just a couple of years ago.
It is historic. They aren't just building servers. They are trying to corner the global market on compute power. They're building what they call Meta Superintelligence Labs. They are betting the farm that whoever has the most computers wins the next decade.
That is a massive, massive gamble. If the AI bet fails, or if it doesn't monetize, they're left with the world's most expensive empty warehouses.
Right.
So how are they paying for this?
Well, the revenue forecast is still strong. They expect Q1 2026 revenue to be between $53.5 and $56.5 billion, but expenses are projected to be between $162 and $169 billion for the year.
And operationally, what's happening with the core business?
The ad engine, the thing that actually makes the money, is humming. Ad impressions are up 18%, and the price per ad is up 6%. They mentioned some technical changes, the GM model and lattice unification, that drove a 3.5% lift in clicks.
Which sounds small, 3.5%.
At $60 billion a quarter, 3.5% is huge money. That efficiency is essentially funding the AI construction project.
All right, so the strategy is spend unprecedented amounts of money to win the AI arms race. Let's see if the analysts were convinced We're going to go through the Q&A chronologically. First up was Brian Nowak from Morgan Stanley.
Right, so Brian went straight for the return on investment. He asked about the long-term revenue opportunities, like 3 to 10 years out, that are being unlocked by this massive investment, and specifically, what is driving the revenue bump they expect in 2026?
And Zuckerberg's answer felt a bit like he was buying time. He said, "We are fixing the core."
He did, but he also got specific. He talked about merging large language models, LLMs, with their recommendation systems. He also mentioned new businesses, like agentic shopping and subscriptions. And interestingly, he pointed out the Manus acquisition, which provides business acceleration tools. It signals they want to offer integrated solutions for businesses, not just ad slots.
Then Susan Lee jumped in on the 2026 growth. She noted currency tailwinds are helping about 4%, but the real driver is ad tech improvements.
Basically, better ranking and the Advantage Plus product. The ads are getting smarter, so people are clicking more, which, pays the bills for now.
Okay, so next we had Eric Sheridan from Goldman Sachs. He asked a question that I think is on everyone's mind regarding the supply chain.
Right. He asked about internal compute constraints, basically.
Yeah.
You have $135 billion to spend, but can you actually buy enough chips to spend it?
And he also asked about the relationship between more compute and scaling ad monetization. And Susan Lee was surprisingly honest here. She admitted they were still capacity constrained.
She did. She said demand for compute is growing faster than they can supply it, and that will last through much of 2026. This is the bottleneck. They have the cash, but the hardware doesn't exist in the volume they need yet.
But she did explain the link to ads. She said larger models, like GEM, transfer knowledge to smaller runtime models.
Meaning they train a massive AI brain and then distill that intelligence down to the smaller models that actually decide which ad to show you.
Got it.
So yes, more raw compute literally equals better ad performance.
Okay, moving on to Mark Schmelik from Bernstein. He asked Zuckerberg if we will see actual product adoption by year end. And he asked Susan a tough one. If the macroeconomy gets weak, if we hit a recession, will you cut this massive spending?
Zuckerberg seems confident. He expects product rollouts throughout the year. He called the productivity shift from agents profound. He really thinks this is going to change how the company operates, fundamentally.
And Susan, did she leave the door open to cutting the budget?
Not really. She clarified that Meta expects to deliver more operating income in absolute dollars in 2026 than in 2025. But she emphasized they are using their current strength to invest aggressively.
So they're committed.
It sounded like it. It sounded like they view this as an existential race. They can't afford to slow down even if the economy does.
Then we had Doug Anmuth from JP Morgan. He asked about the progress of the MSL team, the Meta Superintelligence Labs. And he asked if free cash flow would remain positive given all this spending.
Zuckerberg was a bit cagey here. He said MSL is only 6 months in. He called his own answer unfulfilling because it's so early.
I remember that.
But he claimed they have the most talent-dense team in the industry.
That felt like a trust me answer.
It was. But on the cash flow, Susan noted they have a strong cash balance, over $81 billion. However, she dropped a hint that they might take on debt or external financing to maintain flexibility.
That is a shift. Meta usually sits on a mountain of cash. Now they might borrow money to build data centers.
It just shows the urgency. They don't want to dip too far into their reserves if they don't have to, but they will not let cash flow stop the construction.
Next was Justin Post from Bank of America. He asked if, with all this new capacity, they would expand beyond ads, maybe into cloud licensing or subscriptions. Basically, are they going to become AWS or Azure?
And Zuckerberg shut that down fast.
Yeah, he did.
He said ads will remain the primary driver for the next few years. They aren't trying to become a cloud provider.
Which makes sense, I guess. Amazon and Microsoft have a huge head start there.
Right. And Susan added that online commerce was actually the largest contributor to their growth in Q4. So the core business of selling things to people on Instagram and Facebook is still the engine. They are building a supercomputer to sell sneakers, not to rent out server space.
Okay, then we heard from Ross Sandler at Barclays. He asked about Horizon Worlds coming to mobile.
This is an interesting pivot from the VR headsets. He asked how that fits with the AI vision.
And Zuckerberg described the future format as immersive. He said you won't just watch a video, you will tap it and jump into a 3D or 2D world generated by AI.
He called it an immersive feed. It's a smart move.
Yeah.
It solves the problem of needing a clunky headset to experience the metaverse. If you can jump into a generated world from your phone, that opens it up to billions of users instantly.
Next up, Ron Jose from Citi. He wanted details on the technical roadmap for ranking and recommendation models, specifically those names we keep hearing. GEM, Andromeda, and Lattice.
This is where Susan Lee got technical, but it's important. She said significant headroom remains, and they are doubling GPU clusters just for training GEM.
She mentioned something called sequence learning. Can we break that down? It sounds like jargon.
Think of it like this. Old ad models only remembered what you clicked on yesterday or maybe last week. Sequence learning allows the model to look at a much longer history, what you liked 6 months ago, 3 weeks ago, and 5 minutes ago, and connect the dots in a sequence. It gives the AI a much longer memory.
So it's not just, you liked a cat video, here is cat food. It's more like, you liked a cat video than a travel video than our luggage ad. Maybe you were traveling with a pet.
Exactly. And that makes the predictions and the ads scarily accurate. She said this allows them to scale models up significantly while keeping the ROI positive.
Then we had Ken Gorelski from Wells Fargo. He asked a really strategic question. Is a general-purpose frontier model critical, or are specific models enough? Basically, do you really need to build a competitor to GPT-5, or can you just build smaller tools?
And Zuckerberg was adamant here. He said it is critical. He reminded everyone that Meta is a deep technology company. He said they must control the underlying tech stack.
Why does that matter so much? Why not just use OpenAI's API or Google's?
Because of dependency. Zuckerberg's fear is that if he builds Meta's future on top of Microsoft or Google's AI, they can turn off the tap whenever they want or change the pricing or limit the capabilities.
Oh, okay.
He's saying we need to own the brain, not just rent it. If they rely on a competitor's API, they're vulnerable.
That makes sense. If you're spending $135 billion, you want to own the house, not rent it. Finally, we had Mark Mahaney from Evercore.
He asked for an update on Meta AI engagement, but then he asked the question every shareholder was thinking. Why were there no share repurchases in Q4?
Yeah, usually companies like Meta buy back their own stock to keep the price up. So what was the answer?
Susan Lee said Meta AI is now in 200-plus markets, with engagement varying. WhatsApp is big in India, Facebook in the U.S.
Okay, but the buybacks.
But on the buybacks, she was very clear. No stock was bought back in Q4. She said the highest order priority is investing capital into AI infrastructure to become the leader.
That is a clear message. Wall Street loves buybacks, but Meta is saying, no, we need to buy GPUs instead.
It connects back to the theme of the whole call. They are trading short-term capital return for a shot at dominating the next era of computing.
So let's wrap this up. We've processed the presentation and Q&A. What are the main takeaways here?
The first theme is clearly scale. I mean, spending over $100 billion in a single year on infrastructure is just. It's unprecedented. It signals that they believe the AI revolution is not just hype, it's resource intensive. And the winner will be the one with the biggest compute factories.
And secondly, the company identity is shifting. It really feels like a transition from a social media app company to a personal superintelligence infrastructure company.
Absolutely, and the trade-off is clear. Wall Street gets operating income growth, which is good, but shareholders don't get buybacks right now because every spare dollar is going into data centers.
The vision is a future of AI glasses, immersive feeds, and automated business agents handling everything in the background. It is a bold, expensive bet.
It is, and if they pull it off, they don't just own the social graph, they own the intelligence layer for billions of people.
Well, thank you so much for watching this breakdown. We hope it helped you cut through the noise of the earnings call and understand why Meta is spending all that money.
It was a pleasure.
If you found this breakdown helpful, please click the like button below. It really helps us out. Share this video with anyone you know who is interested in the future of tech or finance. And of course, subscribe and stay tuned for our upcoming content. We'll see you in the next video.